So this is the trade I took today for the 5th of January. So higher time frame, looking at this, I didn't really see anything in the AM session. But I did see a lot of potential for PM. That's why I hopped on. We were moving and displacing very nicely. So just looking at the 4-hour time frame here, you can clearly see we do have an SMT here at the highs. Right here with this high, yeah, we have an SMT. Right. So higher time frame SMT has been put in place here. Now what I was doing was I was scaling down to the time frame alignment, which is the 15-minute. I'll explain that into detail in another video. But the 4-hour aligns with the 15-minute, so I hopped on the 15-minute, saw that we were displacing on the 15-minute time frame. Getting a 15-minute change in the state of delivery here. Now, also, we have nice clear targets below, resting. So what I did was, on ES, looked at the same exact thing. Looked for the change in the state of delivery here. Looked nice, right? We did get a tap of a 15-minute gap. That's what one of my entries is right here. Off the 15-minute gap, I would have been short over here, but I was busy at the time, and it was outside of my trading, which is, lunch from 11:15 to around 1:30ish. And I did hop back on at 1:30, right? So since I am bearish for the time being now, so I'm marking this out, SMT at the highest on the higher time frame. We have a 15-minute change in the state of delivery. We have nice displacement on the lower time frame. And we're tapping into a gap right here. So I'm playing the continuation of the shorts. All right, so I see now, remember, we do have a higher time frame SMT. I'm looking at, do we have a lower time frame SMT that I can go based off of, which we do. Right here, that high gets taken on ES, but on NQ, it does not. So we have an SMT there. All right, and then as soon as we form that SMT, we start to displace down. Now, the reason why I like this this trade in particular was because this 5-minute flipped so quickly, and the momentum changed to the downside. It's just like market experience. Like, I've seen it so many times. So we're respecting this 5-minute gap, and now if I'm going on the time frame alignment, I usually go on the 30-second time frame to base my entry. But what I did was I just waited for the 1-minute time frame, the CISD, which is the close below here. Right, entered a little bit late. I entered on this candle close, and then my stop was at the protected high here at the SMT high, and then I'm just targeting lower, which was, this internal low down here. All right, we do have more targets below, but I didn't really want to be too greedy, and plus I took a loss right before that. It was the same exact short that I'm showing you guys now, but it just ended up not playing out. All right, tapping into a 5-minute gap, nice displacement, the CISD here, entered on the close of this candle, stop loss at the high, and then it just ended up stopping me out. So took a loss there for 24 points. Second trade was a 13.25 point stop loss, and I made 55 points. So outweighed the loss by about 30 or so points, and it was a 1 to 4 RR trade, right? Obviously, I did scale out of some of my position. I think I scaled out some here, and then I left the rest running. So I scaled, I think it's like 40% out here at a 1 to 1.6, and then I left the rest running there. And you guys can see it in this screenshot. All right, so my entry, I added actually as soon as this 5-minute got inversed as well. So as soon as the 5-minute inversed, I actually added a couple of contracts, put my stop loss at the high as well, just because price shouldn't really revisit that. And then same thing, same exact take profit. So that was the trade I took today. I wasn't actually even planning on taking any trades, but the PM looked actually very, very nice, and it was giving some good displacement. So might as well just try it if the entry presents itself and everything aligns together. So update you guys on tomorrow's trade if we do take a trade, and then I'll run that breakdown for you guys as well. So